Good afternoon and welcome. We're coming to you on the 19th for Traders Community and NovaWave. We're going to do a quick little overview on JPMorgan that we put some charts out as a preview just before their earnings. The earnings have come and happened. We can see the market reaction pretty negative to the bearish side, which also coincides with the XLF, the banking ETF, and of course the Dow Jones and the S&P futures, which JP Morgan, being the biggest bank in the world, is part of and obviously a major component. So what happened? Well, we'll go through later with the actual earnings report that you see on the Traders Community website. But technically, coming into it, we had a little breakup above here and a gap just prior. We're looking at the daily. It's above the cloud and it started to falter, recall, off here. So that was a good short if you wanted to take it, but your risk was, of course, to the upside, which, as you can see with the downside, not something that was unachievable. So waiting for the number, you could, as you recall, you could get a fairly cheap optionality. VIX was fairly low on this. The number comes out. The market did not like it, and it was sold off heavily. And as we mentioned, that has been the pattern in many bank stocks. They're going to have great earnings, but they get sold off. And since this number, we've had all the major banks have now come out. So today we had Bank of America, and we also had, who else was out today? Morgan Stanley. And on the Friday with JP Morgan, we had Citibank along with Wells Fargo and BlackRock, who isn't a major bank, but we watch them together as they're one of the largest, if not the largest, asset manager in the world. I think Fidelity may be bigger, actually. But anyway, moving right along. The number, we get sold off. We come under the cloud, under the Cajun. The Cajun crosses through the tank in here. So we continue to sell off, as you can see, to the first major pivot point around 148.93, which is what we got under. That is also, if I come across here, this bottom, so it's a quadruple bottom. If we draw down here, the bottom of that spike was 148.46. We can see this little sectional below here, 147.48. So you got your first little bit of support. As far as Murrey goes, again, this is only not even a 2/8 move. So a fractal, well, if you think of Adams' theory, that distance there over or underneath 6/8, which means it should go under 4/8, lo and behold, that's that level. So a perfect world, we would come down and test these, give a replication of that. Obviously, under that, we get in a much serious decline down here. And you just look at your Murrey Math for that. Volume-wise, you can see that we had heavy selling on that sale down. And as it's fallen, still decent selling, but lower and lower each day. So what looked as a capitulation here didn't really hold it up much because we've gapped down and you've got two gap downs here. So you got two runaway gaps, which have basically filled this. We did have that island reversal here. So that's all been filled. If we move along to the hourly, so pretty clear here what we're looking at, right? This support. And your resistance is going to be this gap above here and that cloud. If it's going to get into this, obviously it's got to do it fairly quick over the next month or so. Okay, let's look at the hourly report, right? So this gives a clear indication of what happened. So number comes out, it's sold off, and it's sold off hard. And remember, a lot of people were hoping because we'd already had the sell-off from higher rates that emanated from the minutes at the start of January, in the first week of January, when they were republished from the December Fed meeting. So there was hope on people actually buying banks into that. Oh, that's no worries. We got a higher rate. So we went up. Boom, 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 boom. Number comes out. And lo and behold, a lot of buy the rumor, sell the fact, but there was more to it than that, obviously, with this powerful selling. Look at that volume. That engulfed all that week's buying. So down we go. We accelerated when we touched the cage in here. The Tenkan came back and touched it. Just a little kiss of death, and bang, we have gone down ever since. We've come down in 5 sharp waves. 1, your impulse. 2, 3, 4, 5. The problem is this is the shorter. I mean, this can be correct, but generally a third's your most powerful. So you would argue that this is actually the third. 4th and 5th. Is that complete now is your question. And also, if we go back to that bullish bearish from your Elliott, always remember have alternative. And you're just looking for 5 waves in the direction of the trend, 3 against. From a Murrey point of view, what have we got here? We're almost down to minus 1/8, and there's that fractal, right? So we got up here almost 7/8, right? So in a perfect world, we're getting into a full move, i.e. 8/8. Remember, you're just squaring the market. You're keeping its all probability. This is that low that we saw over here. We got under. It looks like there was some attempts to buy. So that would have been off that low here at 151. There would have been there's a lot of optionality to 150. That was also here supporting it. That all gave way this morning we had Morgan Stanley opened up and then got powered. So that just hurt the XLF. You saw it hurt the SPX. And if you saw our wraps this morning and weekly on Traders Community, you'll see how we talk through this as far as the index goes. So that was pretty cut and dried there. As far as upside, it needs to get through these levels. Back over 08, which would also put you back over the Tenkan, and you would like to see work done through this. So to get over a strong reverse up here at 2/8 and coincide that, remember we're looking at both the pattern, the Ichimoku, and also the Murrey Math. So combine all those to give you a good read. Okay, so what do we know about this fundamentally? So we have some great contributors over at Traders Community, and one of them who does a lot of our earnings is the Pitbox. So he likes to cover the major banks, major techs, and other areas of influence. So what we know from JPMorgan was there was all eyes on their big number before, but also on how different segments were going to work. What we discovered, and not unexpected, the trading revenue was off more than what people expected, off 11%. Net interest income was up as we started to see rising interest rates through the year from the lending department, from both margin lending and also obviously mortgages and the like. What concerned, and you can go through this, was higher than expected costs is what hurt and scared. So it's one thing revenue, expenses being high. The concern is that they're under controllable when you've got wage crisis plus inflation plus the difficulty of getting things. So technology was a big part of that. We all know what's going on with chips, etc. Okay, so that was the big thing. Expenses for over the year are up 9% to 7.7 billion. So that's $8 billion almost, right? So on the positive side of that, they're believing that's going to get reined in, but their interest expense is going to go up to 50 billion. Income, 50 billion over this year, 22, and up from 44.5 billion. Jamie Dimon has been talking up a lot of more interest rates. So the market's now expecting 4, which is in line with him. So he's taking that into account in that. A lot of things can go wrong, obviously. Another negative was the fine of 200 million that they got for bookmaking failures. No one wants to hear that around banks. So go through that and you'll find all the other banks on the website that reported. So welcome to that. It's a quick overview here. Hopefully you found that helpful. smash, as they say, smash our like and subscribe. So these will come to you live. We're going to try to do more and more of these individual quick bites on stocks, technical, fundamental. Have a bit of fun with it. You got any questions? Please hit us up either on the website here or on YouTube. So thank you for joining us, and we plan on doing all these different banks that we covered, and we also have other stocks that if we have the time available, we will do them on Netflix. Example, we cover the major markets in our premium market, meaning S&P, Nasdaq, Russell, oil and natural gas are our big things, and we also have other guests join us about crypto and the like. Thank you for joining us.